So, let's talk about Goldman Sachs. I mean, this is a titan of Wall Street, and they've just dropped a monster quarter. After all the uncertainty we've seen, this could be the big signal everyone's been waiting for. Let's really dig into it.
Right? This is the question everybody is asking. And you know what? If you just look at Goldman's latest numbers, the answer seems pretty clear. It's a big yes.
Okay, so check this out. $15.18 billion. That's the revenue they pulled in just one quarter. That's a 20% jump from last year. But honestly, that huge number, it's really just the tip of the iceberg.
And look, it wasn't just about the top-line revenue. When you dig a little deeper, things get even more impressive. Their earnings per share, they shot up by an incredible 46%. And their return on equity, which is, a super important way to see how good they are at making money with their money, hit a really solid 14.2%. So the big question is, how did they do it? Where did this huge surge come from?
Well, it all starts with their classic powerhouse, right? Global banking and markets. This is the heart of the machine, the part of the bank that just lives and breathes deal-making. And let me tell you, after a couple of quiet years, that engine is absolutely roaring back to life.
I mean, just try to wrap your head around the scale of this comeback. Goldman has advised on over $1 trillion in M&A deals just this year. $1 trillion, that's wild. It puts them more than $200 billion ahead of their nearest competitor. It's a huge sign that, yeah, CEOs are definitely done waiting around. They're back to making big moves.
So what's the real driver here? It's pretty clear. A 60% jump year over year in their advisory business. That's the money they make just for giving M&A advice. And it's not only M&A either. You've got underwriting, helping companies raise cash by issuing stocks or bonds. That also saw some massive growth. And a big part of that is because the IPO market is heating up again. And listen, according to their CEO, David Solomon, this is not just some temporary fluke. He's calling it a tailwind, and he's pointing to the fact that their pipeline of deals is the biggest it's been in 3 years. So it really looks like this momentum is here to stay. But, and this is important, this whole comeback in deal-making, it's really only one part of the story. All right, so the second piece of the puzzle is all about building for the long haul, what they call durability. They are laser-focused on asset and wealth management, and this is Goldman's big play for income that's way more stable and predictable.
So what are these durable revenues they're talking about? It's actually a pretty simple idea. Think of it like this. If making huge deals is like getting a massive, unpredictable bonus, then managing money for clients is like that steady, reliable paycheck that you know is coming in every single month from fees. It's the thing that makes the whole company more stable, so they're not just riding the crazy ups and downs of the market.
And the numbers here are, well, they're just staggering. Right now, Goldman is overseeing a record $3.5 trillion in assets. To give you some perspective, they've grown that giant pile of money by more than 75% in just the last few years. That's incredible growth.
And we're not just talking about one kind of asset here. No way. This portfolio is super diverse. It's spread across your traditional stocks and bonds, but more and more it's in what they call alternative investments. So what's that? It's stuff like private credit, real estate, basically assets that don't always move in lockstep with the public markets. And you know what? Their big push into alternatives is really paying off. They just raised a record amount for those funds last quarter, totally blowing past what anyone expected. That diversity is the real key to being durable.
Okay, so you've got this roaring core business on one side, and this super durable growth engine on the other. But what's next? Well, Goldman is also looking straight to the future with a huge tech overhaul. They're actually calling it One Goldman Sachs 3.0.
And their CEO, David Solomon, he's being really clear about this. This is not just about cutting costs. No, it's about unlocking brand new growth. The whole idea is to use AI to automate and streamline pretty much everything. I mean, from how they bring on a new client all the way to how they manage risk. And when you do that, it frees up a ton of money and a ton of talented people to reinvest right back into the business.
Seriously, this strategy touches literally every single part of the company. We're talking about making things better for clients, for their own employees, and completely reinventing how they handle risk and productivity. It is a fundamental rethink of how they work, from the ground up, and it's all powered by technology. You could say this is Goldman's massive bet on what the future of finance is going to look like.
So let's put it all together, right? You take that huge banking comeback, you add in the steady, durable revenue growth, and you top it all off with this massive AI overhaul. What do you end up with? Well, from where Goldman is sitting, you get a very clear reason to be optimistic.
It really feels like the whole environment is shifting in their favor. Those headwinds they've been fighting for the past few years, like tougher regulations and all that market uncertainty, well, those are starting to feel a lot more like tailwinds pushing them forward.
They're seeing a friendlier regulatory environment that lets them, in their words, be on offense. Then you've got AI promising these huge gains in productivity. And to top it all off, there's over $1 trillion of what's called dry powder. That's just cash that private equity firms are sitting on, ready to invest. That's a lot of fuel for the fire.
So if you're going to take away a few key things, here they are. First, their pipeline for new deals is fuller than it's been in years. Second, that durable revenue engine, it's raising money for those alternative investments faster than ever. And third, the whole regulatory world is starting to look a lot more favorable. That is one heck of a powerful combination, and it's exactly why they're so confident about what's coming next.
And that brings us right back to the big question we started with. Goldman is, without a doubt, setting themselves up to ride the next big wave. They're betting that this perfect storm of a resurgent market, a super durable business model, and a massive tech pivot is going to create a brand new boom. The only question left now is, are they right?